This conference will now be recorded.
So yesterday we have covered the introduction part as well as organization structure of financial accounting. So where we have seen what is client and what is the purpose of a client. Then we have seen company and company code. Okay, so and we have also seen types of servers, development server, quality server, production. Then we have discussed about company as a group of company or internal trading partner. And we have also discussed the company codes. So what we'll do today, uh, we'll start with the, before we start, we'll again quickly cover what we have seen with different notes. You can see that. So ERP stands for Enterprise Resource Planning. SAP is Systems Application and Products for Data Processing that we have covered yesterday. And S4 is nothing but S stands for suite. Then 4 means fourth generation. And in SAP S4HANA, we use a database which is called HANA. HANA database that we use. Previously in SAP ECC uses SQL, Oracle. There were some other databases as well, and still many companies are using SAP's ACC, and their database is different. But when it comes to the introduction of SAP S4HANA, we are using HANA database. Then we have seen three-tier architecture. So it is nothing but we can say the structure. So one is presentation layer, second is application layer, and third one is database layer. So presentation layer, that means we can say that SAP Easy Access. And now this structure is related to SAP ERP. Now it will work with GUI when it comes to presentation layer, that is graphical user interface, which is the link between presentation and application layer. That means, what is the presentation layer? That means whenever you give any inputs, you'll get the results. We'll get the reports as well. That means whatever the day-to-day transactions happen, that is done by end users, SAP end users. This is called presentation layer. And application layer means SAP ERP. Now it's SAP S4HANA with different versions. Okay, and the third layer would be database layer, which is where database layer stores the data in different tables. The tables like BSEC, BKPF, now we have SEDOCA. These are the tables. If you want to, once we configure or once we suppose end user does the accounting entries or posted any invoices or makes payment, if you want the further details, or if you want all the information, if you want to uh, dump of all the vendors or all the, we can say that list of GL accounts, everything will get from database layer. That is nothing but different tables. So this report will come from database layer to presentation layer. So it will again go back to presentation layer. So we have seen some basic, like in 2010 SAP Business Suite on SAP Data HANA base. We had a three structure, that is presentation, application, HANA. In 2014, SAP introduced SAP Simple Finance, that is an add-on. And again, if we are talking about three layers, so presentation, GUI, application, then HANA database now. But in 2015, SAP introduced SAP S4HANA with presentation, UI 5, then application SAP S4HANA, then HANA. So This is the brief history of SAP. When it comes to versions, so it's which is related to SAP S/4HANA. So it started in 2015. The first version was 15.11 and second one was 16.10. So 15.11 is nothing but it's a date, DDMM, 15th of November. On 15th of November, SAP had introduced 2015 version. Sorry, 15.11 version. And similarly in 2016, version 16.10 had been introduced. Okay, the version name is 16.10. Similarly, 1709, 1809, these are nothing but the dates. DDMM. Okay, 18th of September, 19th of it's 19th of September. We can say that 1909. But from 2020, they have changed the format of a version. Previously it was uh, date format. Now it's a year format only. Why? So from the year 2020, the version is 2020. In 2021, 2021, and in 2023, it was 2023. Even if you are talking about the last version, it would be 2030. Maybe they will introduce some other version as well up to 2030. Okay,
Okay, sir.
yeah. So what we'll do, we'll start with the configuration today. Just give me some time. So I'm unable to share my screen, which is related to uh, SAP server. Not sure why, but what I'll do, I'll take a new server, and what we'll do, we'll start with configuration tomorrow. Will that be fine?
Okay. Okay, sir.
Because it's a different server, I'm not sure what is happening. So what we'll do, we'll discuss about the other things which we haven't discussed yesterday. So we'll continue with the business process. Then today itself, I'll take a new server access. Okay, then we'll start with the configuration tomorrow.
Okay, sir.
Okay,
Okay, sir. Sir, when you are going to share this material to me, sir?
sorry,
This material, sir, which you are showing PPT, right?
today itself.
And this Word documents and all.
Yeah, for I mean from today itself, uh, from today onwards, I'm going to share the Excel sheet as well as some notes as well.
Okay, sir.
Okay, so there
Because I
is
am not able
one,
to write also.
sorry.
During the session, I am not able to write, sir, even.
Yeah, yeah, that is fine. That's why I will provide the notes. I'll provide the
Okay,
Excel
sir.
sheet. Even also provide the recordings as well.
Okay, sir.
Okay. Yeah.
Okay, okay, sir. Sir, am I audible to you?
Yes, yes, you are audible. So
Sir,
are
I
you able
will
to
mute
see?
my this one, sir. I will mute this one because any disturbances will not in between.
Okay, okay, sure.
If
So
I want
whenever you have,
anything to ask, I will. Yes, sir.
okay, sure. So are you able to see this screen, SAP configuration?
Yes, sir.
Yeah. So what we'll do, we'll start with these notes. So this is the file that I will refer, but today I will not share because I have to change some of the settings, some of the things, some of the parts which are old. So once I change this file, then I will share it to you. Okay.
Okay, sir.
Today I'll
Okay.
share the Excel sheet, and I'll check with the introduction part that I'll share.
Okay, sir.
Okay.
Okay, sir.
So yesterday we have seen this SAP, what is SAP, SAP history. So different modules, what is SAP methodology. Then we have also seen the SAP Activate. Then we have seen SAP landscape, three different servers with different clients. We can say that we have started with client, R3 system, introduction, and there is SAP R3 modules. So basically, if you're talking about technical modules, so we have ABAP. I'll just keep this. All right, it's not working perfectly. Then we have covered what topics are there under finance. So we have general ledger, accounts receivable, AR, AP, asset accounting, withholding tax in financial accounting. When it comes to controlling, so we have cost elements, cost center, profit center, internal orders, and product costing. So I'll just change the. Now, if you're talking about different other modules, so sales distribution, under sales distribution, there are sales orders, pricing, picking, packing, and invoicing, shipping and collection. So we will not cover those in detail, but when it comes to integration part, we will cover the O2C cycle. I mean, the what things are there. I mean, how to integrate financial accounting and sales and distribution, both modules that we will cover. I mean, of course, those basic things will be there, will be covered, like sales order and entire O2C cycle. that is order to cash. Then we have material management. So material management consists of requisition, PO, vendor selection, goods receipt, accounts payable, inventory management, raw materials, finished goods. These things uh, are there under material management. So in when it comes to PP, so we have capacity planning, master production scheduling, material requirements planning, and shop floor. I'm just covering the basic introduction to other modules as well. So just a second. Now we see that in quality management, planning, execution, inspection, and certificates, these are their options. So we'll just go through that. In human resources, employment history, payroll, training, career management, succession planning. So these are necessary when it comes to integration with integration with SD, integration with HR module. So FICO module, we have covered define company. I mean, what is company code. We have also seen the business area and some part of profit center as well. So we'll see how to define a company. So we'll just see. Before that, we have also covered enterprise structure, but the format was different. Now, if you see that client, under client there is a company. Okay, company is nothing but group of company. If we are talking about group of company, so it is used for consolidation purpose. Now we have three company codes, different three company codes. So for controlling part, we have controlling area, which is an organizational unit. Now, what is BA? BA is nothing but business area. So under um, one company code, there are three different business areas. Maybe they are the with they are with different locations. One is maybe from Hyderabad, one is from Mumbai, one is from Chennai. So these are the enterprise structure, and FA stands for functional area. So again, functional area is nothing but it is, we can say that department wise we can create a separate organizational unit like HR, production, like that. But when it comes to financial accounting, global settings. Now we will cover uh, what is fiscal year, then posting periods, fiscal field status variant. So yesterday I think we have covered the um, what is variant and all, right? No, I think we haven't covered it yet.
No,
So we'll cover it here.
no,
We have
sir, we
covered
have not
only,
covered.
okay, we have covered only company code and business area and profit center, right? Difference between
Yes, sir, yes, sir.
business and profit center. All right. So this is the organization structure. You can say that organization structure under SAP environment. Now, if we see, we'll go to financial accounting global settings. So these are the topics are there under financial accounting. So under general ledger, we have some other topics as well. So we'll cover these topics later. Now, if we are talking about integration part, we have FICO with financial accounting with, now is we different modules under FICO. So we have controlling is the other. So we have general ledger, accounts payable, receivable, asset accounting. So under general ledger, so we have different sub modules like AR, AP, and asset accounting. These are the sub modules, you can say that. And general ledger can integrate with HR department like salaries, employee advance. We can say that employee numbers as well has been generated under HR module, increments and taxes. All these covered under general ledger, which can integrate with HR. Similarly, with accounts payable, which can be integrated with MM,
Mm-hmm.
that is goods receipt, invoice verification, vendor payment. So this is related to procure to pay cycle. Now, if you're talking about AR, so AR will be integrated with SD, that is sales and distribution module. That means it covers material dispatch, invoice entry, payment receipts. So all the activities related to order to cash, that is O2C cycle. Now, if you're talking about asset accounting, so it is integrate it integrates with PS. PS is nothing but project system. So it covers asset procurement, then installation, capitalization. These will come under uh, asset accounting will be integrated with PS. That is SAP PS. That is SAP project system. So again, we have some same data. Okay, so we have covered company. This is the definition of a company. It's a smallest organization unit for which individual financial statements can be drawn up. And company can consist of one or more company codes. So yesterday we have seen. So it can be used for consolidation purpose as well. So all company codes within a company must use the same transaction chart of accounts and the same fiscal year breakdown. So we will see what are the chart of accounts, what is the fiscal year uh, variant or variant, we can say that. Then company has one local currency in which its transaction figures are recorded. So if we create a company and if we give the currency USD, okay, then we create company codes with different currencies. Yesterday we have seen the company's headquarter is US, and there are three company codes. One is from UK, one is from suppose say China, and one is from other uh, maybe one is from Brazil. So in this case, uh, at the time of creation of company code, whatever currency that we apply or give to a particular company code, that is called local currency, or we can say that company code currency. And this, whenever we create a company, that means this company's currency would be group currency, sorry. So there is a difference in between group currency and company code currency. So this is the steps, and this is the menu path to go to reach to go to company option. Okay, so we'll see this from tomorrow onwards. Okay. Now with definition is smallest organization unit of financial accounting for which a complete self-contained set of accounts can be drawn up for the purpose of external accounting. Again, it is used for external reporting. The process of external reporting involves recording of all relevant transactions and generating all supporting documents for financial statements such as balance sheet and profit and loss. So again, define company code. How to define a company code in SAP? The steps are given. Then assign company code to company. So once we create company and company code, uh, for consolidation purpose, we need to uh, bridge the gap in between the two. At if you want to merge, if you want to assign company code to company, we need to go to this path. That is T code is OX16. and path, there is a menu path is there that we need to follow. Okay, so that we'll cover tomorrow. Then business area. So we have seen the business area yesterday. So an organizational unit of financial accounting that represents a separate area of operations. Separate area of operations, that means uh, different locations, different branch, or different office, or responsibilities. Responsibility is nothing but it can be a different geographical location, that as well. So you can create financial statements for business areas as well. So we can create financial statements under company. We can create financial statements under company code, and we can also create financial statements um, for business areas as well. That means we can have separate balance sheet and profit and loss for Mumbai location. We can have it for Hyderabad. We can have it for Chennai. What if they are part of business areas? So you can use these statements for various internal reporting purposes. Okay. So how to define it? This is the path. Now functional area. So it is, we can say that it is for, it is an enterprise or government with functional aspects. And if you're talking about different functional areas, so we can have different departments like manufacturing, manufacture, administration, sales, and R&D. So we can have different functional area. So we can create as per the requirements. So this is the definition. I mean, uh, how to create a functional area or how to define functional area. This is the menu path and T code that we can follow. Then credit control area. So credit control area is nothing but it's an organization entity which grants and monitors credit limit for customers. So credit control area can include one or more company codes. So the only thing that you define in the company code that table is the default credit area. Okay, so how to define a credit control area? So we can define it with the help of OB45. That means we have to provide a credit limit for particular, I mean, area, we can say that. Then we can assign company code to company controlling credit control area as well. Once we assign company code to credit control area, that means it is under credit control management. Now that chapter is financial accounting global settings. So under this, so we define fiscal year, then posting period, fill status variant, and tolerance group. So these are the different um, options are there when it comes to variant. So we'll see what is variant and variant principle. Okay, so let me share the Excel sheet first. So we can discuss now what is variant and variant principle. So for that matter, I'll just use blank screen. variant and variant principle. So variant. So variant, we can say that what is variant? So variant is an object in SAP which we define once, and then we can assign it to different company codes. Okay, say that it's an object. It is an object in SAP which we define once, which we define once, and we can assign it to different. Can assign it to different company codes. So in short, if you're talking about variant, suppose say we are doing we are every day we are going to use one screen, okay, one T code only, and every day we are adding or applying the same details, each and every details in that particular field every day. So in that case, if you want to instead of doing the same thing again, adding all the things again and again to the particular transaction code, we can have a separate variant that can be saved once, and we can use that variant again and again. Okay, this is just uh, the definition of variant. So different company codes that we can assign it. And if you're talking about the number of variants, so it could be fiscal year variant, so it could be posting period variant, or it could be field status variant, and we can say that chart of account variant. So we'll now discuss about those important four variants. Okay, so example would be, so we have one is fiscal year variant, second would be posting period variant, third would be field status variant, and fourth would be chart of account variant. So we'll go one by one. So first of all, we'll start with fiscal year variant. Okay, so it is nothing but in the SAP system, we need to define, or we can say that we need to tell the system that which company codes are going to follow what financial year. Okay, if we take the example, if the company codes are in India, they will follow April to March financial year, right? And if the company codes are in Europe or US, they will follow Jan to December, that is calendar year. So what we need to do is that we need to create a fiscal year variant for April to March. We need to create a fiscal variant for Jan to December, and then we need to assign this to our different company codes. Okay, so in the fiscal year variant, we can define what is the total number of periods, what is the total number of normal periods, and what is the total number of special periods. So normally we define 12 normal periods resembling to different months in the year, and we can define up to 4 special periods. So this is the uh, important definition of fiscal year variant. So let me share one detail. I'll copy paste. This is for fiscal year variant. I'll copy paste it over here. All right, so this is a calendar year, Jan to December, and this is April to March. Okay, so now this is related to 2023. What I'll do, I'll change to 2024. Now, if you're talking about, now we are in the month of January. Suppose say we are working with US company and we are following the calendar year. So again, first Jan, second Jan, first Jan to 31st of Jan, it will come under period 1. So in SAP, period is nothing but period is equal to month. Okay, so this is the first month, January, February, March up to December. So here there are 12 periods. When it comes to April to March, so we have again 12 periods. But our financial year starts in the month of April. Okay, I'll tap it over here. So what would be the we can say that, suppose it's a 2024. Now we are into, suppose we are following April to March. Okay, so in the month of April, as per SAP, it should follow period 1. So April would be period 1, then May would be period 2, June would be period 3, July would be period 4, then December would be period 9. Okay, now if you are talking about the remaining things, the remaining months, so it would be January, February, March. Suppose say Jan, February, March. So this is the 1st of April to 31st of March. Okay, so if now we are into 2024, once we reach month December, and then it would be next year. So next year would be 2025. Okay, so how to, so this is the first period, and December would be 9 period, and Jan would be 10 period, 11 and 12. So this is for April to March. Here it's a situation that how to now, here fiscal year would be 2024. Okay, now the situation is January, February, March. How can we consider these 3 months under the fiscal year 2024? So in this case, there is an SAP, there is an option called year shift. So in the year shift, what we do, we need to use -1 option, -1 and -1. That means once we use the -1 option over here, that means these three remaining months, January, February and March months, which are which belong to the next year, that is 2025, will be considered in the fiscal year 2024. So have you understood, Rekha, about this air shift option? All right. So this is the fiscal year for 2024, and financial year is financial year is from April to March. When it comes to Jan to December, we don't face any issue because it's a calendar year: 1 2 3 4 5 6 7 8 9 10 11 12. Okay, and now these are the 12 periods. These are called normal periods. Okay, so this is the concept of 12 normal periods. Now if you're talking about the fiscal year variant, it is nothing but the, in SAP system, we need to define, we need to tell the system which company codes are going to follow what financial year. If we take the example that there are company codes in India, they will follow April to March financial year, and while if the company codes are in Europe or US, they will follow Jan to December. So what we need to do is we need to create a fiscal year variant for April to March, and we need to create a separate fiscal year. We need to create a fiscal year variant for Jan to December, and then we need to assign this to our different company codes. Okay, so company code of India will follow the different fiscal year variant, that is for April to March, and the company code from US or Europe, mostly US, we can say that, will follow a different fiscal year variant, that is for Jan to December, that covers a calendar year. So in the fiscal year variant, we can define what is the total number of periods, what is the total number of normal periods. Now if you are talking about normal periods, so these are the 12 normal periods. Okay, and also we can define up to 4 special periods. So what are 4 special periods now? So that is a question in SAP. In SAP fiscal year variant, so we have 12 normal periods. Okay, that means 12 ones. And also have 4 special periods. So what are the 4 special periods now? So why they are used. So many times once we close our financial year, okay, let's say in 2023, we have done our, in the month of December, we have closed all the 12 periods. Okay. And if you want to post an adjustment entry in year 2023, okay, and which is already closed, and now we are into 2024, and we have started working on year-end activities, and at that point of time we have closed all the previous periods, that is Jan to December, and we have to adjust, we have to make an adjustments, and we have to post some adjustment entries, okay, in the previous year, that is 2023, but which is closed now, which is already closed. So if you don't want to open the normal periods, okay, that 12 normal periods of 2023, we can simply open the special periods and post our year-end adjustments. Okay, so fourth special period would be now, you're talking about Jan to December. These are the 12 periods. The fourth special period would be 13, 14, 15, and 16. Okay, now we are into we are doing some year-end activities in the month of Jan, and these 12 normal period has been closed. Then we can use these four special periods for adjustment entries. If we want to post some adjustment entries or accounting entries, or maybe related to some tax or compliance related activities, or some management related transactions that we need to post in 2023. So in that case, we will use these four special periods. Okay, so these are the options. But if you're talking about those four special periods, why do we need four special periods? So this we can do in one special period also, right? So we can use this 13 option, and we can forget 14, 15, 16. But why do we need four options? So that is a question. So normally SAP has provided you the flexibility that you can differentiate the type of postings, type of adjustment postings that you are making in the special periods. Okay. For example, if you want to differentiate the year end year end adjustments which are recommended by the auditors or recommended by the managements, or we can say that recommended by tax authorities. So you can use one special period just to post the adjustment entries related to auditors. You can use another special period to post the adjustment entries which are related to management related activities. So because of that reason, they have given four special periods. So there is a flexibility. We can use this for, suppose, say, internal use, internal adjustments, that is management related. We can use it for tax related activities as per tax authorities suggestions. Then compliance related. Okay, we can use this fourth one for any other option. So this is nothing but fiscal year variant. Okay, similarly we have posting period variant as well. So second would be posting period variant. So as we know, the financial year definition in the fiscal year variant, we define what is our first period, what is our second period, and similarly what is our 12th period or fifth, seventh. So we can define this into fiscal year variant. But if you want to tell the system which period is open for posting, which period is closed, that we can control from this posting period variant. Okay, so in the posting period variant, we can tell the system that which period is allowed to be posted. So normally in the posting period variant, there are three period intervals. First period interval would be used to control the financial postings. So here, and which controls period is which is allowed to post the financial entries, right? Second period would be normally for the special periods. We can control which special period is open for the financial entries, and the this is the second option. The third would be, I mean, we can use this which is introduced uh, in SAP S/4HANA newly, and it's normally used to control the CO postings. Okay, so that will discuss it again when it comes to when we define these principles. So third type would be uh, variance is the field status variant. So normally when you are posting the accounting document, the third would be now field status variant. Okay, so this is the third one. Normally, when we are posting the accounting document, based on the GL that you are debiting or crediting, some of the fields are marked as required, some of the fields are optional. So now the system controls this. Okay, so suppose we are using one transaction code, and under that transaction code there are different fields are there. Okay, we can say that there is a name, address, and telephone number, mobile number, then postal code, PO box. These are the options are there. And suppose say if you want to hide one field, that is PO box. I mean, we don't want it. Client wants that this field, this field of PO box should be removed or should be hide from the report. In that case, we can hide that field from a particular transaction code. So, or we can make it mandatory, or we can say that we can use this as an optional as well. Okay, mandatory means if we can say that required. So if we keep a particular field required, that means we if we don't add any details into that field, system will show the error. That will show the error that that we need to fill the details, required details into the particular field. Okay, so these settings or these control this controls by the field status variant. So what should be optional? So now the system controls this. What should be the optional? What should be the required entry? What is the, we can say that optional entries, optional fields. So now the system will control this. So system controls through the field status variant. So if you are uh, now if we say that when you are going to create a GL master data, we assign the field status group to that particular GL. Using that field status group, system will determine which field is mandatory, which field is optional at the time of hosting the transactions. Okay, so this is nothing but field status variant. Then fourth would be chart of accounts. Now it is nothing but the definition of cost accounts. So the GL account that we use if you want to do the accounting. Okay, so basically why we are using the uh, SAP FICO module. So we are using SAP FICO so that we can generate our financial reports, right? Generate financial reports, that means there are different transactions, there are different kinds of GL accounts. So why are the financial reports? So it is balance sheet and P&L. If you go to the balance sheet, there will be two sections, liabilities and assets. And if you go to P&L, there will be two sections. One is income statement, one is income, and second would be expenses. Now, if we want to generate these statements, definitely there has to be some postings to these particular GLs. So in assets, liabilities, you may have n number of GLs, right? General ledgers. In expenses and incomes, also you might be having some n number of GLs. So if you want to create these GLs, first of all, you have to define your chart of account definition. So chart of account is nothing but the list of GLs that would be created as per the number of groups, we can say that. So normally in the chart of account definition, we define three important things. First of all, what would be our maintenance language, and also we also define what would be the length of our GL account numbers. So all data would be saved. The maximum length of the SAP support in the GL account is 10 characters. So you cannot have more than 10 characters as the length of the GL account number. So there are basically three types of chart of accounts that we'll see tomorrow. Okay, so let me quickly share the screen. I'll stop sharing and we'll go to that Word file. If you're talking about the fiscal year, these are the 12 special periods. Are you there, Rekha? Okay. So these are the 12 normal periods: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So, and these are the special, four special: 13, 14, 15, 16. Okay, the fiscal year defined can be defined as year independent and year dependent. So, what is year independent? That means the same number and dates for the periods every year. And dependent means periods can vary from year to year. Okay, so we'll discuss the difference in detail tomorrow. So calendar year is nothing but the fiscal year. If you're talking about the calendar year is equal to fiscal year, that is Jan to December. And if the calendar year is different than fiscal year, that is that Indian companies follows. The financial year starts on April 1st and ends on 31st of March. In that case, calendar years is different and fiscal year is different. So this is the example. And if you see this -1, -1, -1, That means we have adjusted a 3 months, Jan, February, March, in a same year. Suppose say that we are in 2024, and if you want to adjust now that these 3 months will go to the next year 2025, and if you want to adjust these 3 months, in that case we will use the year shift as -1. This is the example. So what is full years with different period dates, shortened fiscal year? We'll cover this tomorrow. And normal special periods. Okay, the infrastructure that is there, that will again discuss tomorrow. So how to define posting period variant, that will again be covered tomorrow. And how to define open and close posting period. So this, all the activities will come under global settings. Okay, so I'll stop the recording now. All right then. Um, See you tomorrow. Thank you so much.